What is up, one and all? We are here for another Ask Us Anything Cash
Anything.
Coaching Hour, where we are going to dive into the depths. We're going to go as deep as we can go into the world of personal finance. That's what we want to talk about. That's what we are hoping you are here to listen about, or to ask questions about, or to get more information about. I am one of your hosts this afternoon. My name is Jonah. I'm sitting here with.
My name's Jesse.
Yep, I'm from Greenville, South Carolina.
North Carolina.
Okay, I'm 32.
About to be 40.
Okay, I'm love personal finance.
Same. More and more.
Okay, I love it. So we are excited to chat with you. If you are joining in, if you would tell us where you're joining in from, that'd be
always
super
cool.
helpful. We got somebody over there on YouTube is already ready to
How
go.
do we
How do we
start?
start? I love it.
Hi.
I love it. So if that is you, just tell us where you're watching from. That would be helpful for us. Again, on this call, our objective here is to talk to you about all things personal finance. We specifically have a significant amount of knowledge base inside of what we like to call the infinite banking concept. It's actually not something that we came up with, but that is what we know through and through, inside and out. In fact, I recently even was asked to attend a Infinite Banking Coaching Academy, which was fun. We just got back from that, and we're kind of walking through it.
But it was not quite as far away as the Moroccan Empire.
Is that Morocco? So we've got somebody on YouTube saying the Moroccan Empire is where they're from. I got a Dallas over there on YouTube. That's from Anthony. What's up, Anthony? I see you there. Instagram, I got we got Jonathan Hendo saying, let's go with some fire.
What's up, Jonathan?
What's up, man? It's been a long time since we chatted. But Moroccan Empire, tell me about it.
Yeah, so I traveled abroad in Spain when I was learning Spanish, wanted to be bilingual, and it's so close or easy just to jump on a train or a bus, not something big, to be able to land in a different country.
Yep.
And Morocco's just to the south. Took a boat over the Strait of Gibraltar, and I don't know what I ate, but I ate what was there and walked around and bought some gifts. And
I love it.
It was wild.
All right.
You felt like you stepped in a different place for sure.
I like that. I have not been to the Moroccan Empire, but Jesse has. So maybe you can tell us all about it a little bit later. And thanks for tuning in. Jake Doster says he's watching from Spartanburg. I know all about Spartanburg.
We've been on the phone this week.
And their new baseball team, the Spartan Burgers. I don't think they tried very hard on that name personally, but that's neither here nor there. What we are going to talk about during this hour is all things personal finance. We've got a few insights from some of the other people that are learning learning the intricacies and fundamentals of personal finance with us. I found a cool video online that we're going to watch and let everybody else watch. That's tuning in, and we'll kind of try to dissect that as we go into it. We'll talk about infinite banking, the infinite banking concept and the way that we're using it, and some of the fun things that we are doing with that. And if you've got some insights to that, we'll ask you to share also. But right now, we're so appreciative that you are tuning in to listen and learn with us. If you have not yet, tell us where you're watching from. So I see Teddy Rausch over there on Instagram just jumped in. Teddy, where are you watching from? We'd love to know, and we'll just kind of walk through that as we go. So before we jump into it, Jesse, why don't you give the people a little bit of background on what infinite banking is, why we're even here doing this hour, and then we'll jump into some of the fun stuff that we've done recently.
Sure. So what it was for me was I was married. My wife and I had just had our second son. I was pursuing my career at the time, and I had a friend invite me out to see a presentation, much like we share with folks live now.
Yep.
And as I was sitting there, what it was for me was a way for me to be able to get out of debt, but to be able to grow an asset at the same time. So infinite banking allowed us to be able to do that. It allowed us to be able to take more control over our money that banks typically enjoy in our lives. And we use the process of infinite banking to pay off debts, which is something much more known and understood. You could just debt snowball, but we were able to do both those things at the same time. That's what it meant to me in the beginning.
I love that. For me, that when I first learned and heard about infinite banking, I also was in this position where I had some consumer debts to pay off, which was fun. I think I went back and calculated. I think it was like $19,000 worth of credit card debt or something.
You were doing better than me.
Well, I wasn't doing so well. I wasn't that old, but we were able to knock a lot of that off. I don't carry any revolving credit card debt currently. What's up, Mike? Mike says hi.
Hey, Mike.
What's up, man? We got It's JDo over there on Instagram.
Sounds familiar.
He says, "Let's grow." What he should have said is where he's calling in from, which is what we asked, but we'll continue. So for me, when I saw infinite banking, it was a way to, as we've coined it now, save money and spend money at the same time. That's what I saw. I saw a way that I could have forced savings, if you will. You can call it that if you want to. But I could put my money in a place, store my money, or keep my money in a place where it would grow. And there was guarantees surrounding that. And then I would also have access to cash value, and then I could use it. And that was huge for me because I needed to use money. I think a lot of you guys out there need to use money, right?
Every day.
And so that's what's so important about infinite banking. It does not take away that liquidity factor of the ability to use money, but still gives you a significant amount of the attributes when it comes to, like, when you think about sitting money or storing money someplace. So that's where it's important.
I like the word structure.
I like that.
It provides structure to the savings.
Yep.
I feel like it's definitely done that for me. I know that I'm doing this on a monthly or annual basis, whatever it is that I've chosen. And it gives structure to my savings.
Mimi says she's calling from Texas. She's watching from Texas. Hey, Mimi. And we did get Fulton County, Georgia, out of It's JDo over there on Instagram.
He's trying to make an allusion to a song, I'm sure.
There's a couple of folks out there who call them the Instagrammies. That's what they like to call. Okay, Jesse, let's jump into it, man. Enough introductions, right?
Yeah.
Let's get into some fun stuff. Okay, so I've watched this video.
And I have not.
Okay, perfect.
It's always fun.
I'm going to play it. The video's a minute long for everybody who's watching. The video's a minute long. I'm about to play it. We're going to watch the whole thing, and then we're going to come back and dissect the video in certain parts because she gives like 2 sentences, then 1 sentence, then just a couple words. And so we're going to watch the whole thing, and then we'll come back and do it. Oh, wait, hold on a second. Jake says his wife calls it recycling their own money.
Recycling, such a strong concept to wrap your mind around.
Yep.
That's good.
I like that. Okay, everybody, here comes the video. Let's watch it together.
I'm 54, and if you're younger than me, here's some really hard financial truths that are probably going to make you uncomfortable, but they just might save you. Your dream life is possible, but not with your current financial habits. If you need a payment plan to afford it, you can't afford it. You're not saving money when you buy something on sale. You still spent, you just spent less. If you don't control your money, someone else will. And guess what? They're not going to use it in your best interest. A credit card is not an emergency fund. If you don't take the time to understand money, you will spend your life working for someone who does. Financial stress, it's self-inflicted. You can't retire on vibes and optimism. You're going to have to work until you die if you don't start investing. Your bank account reflects your choices, not your excuses. You don't believe me? Take a look. Every dollar you spend is a vote for the life that you're building. What are you voting for? Security or poverty? You don't need a financial miracle. You need financial discipline. Stop praying for money and begin managing what you have. Your future is being sold off one impulse purchase at a time, and you will never escape the cycle of being broke until you admit that you are the problem. Hope that helps.
If that were a UFC ring, it's just like bam, 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 bam.
She
bam,
went
bam.
in, right?
That's a really long combo.
What about that?
That's good, man.
Right?
That's good.
She went in. Okay, so I watched this video the other day. I'm scrolling the Instagrams, and I see the video. I'm of course, you can probably imagine when I get on these social media, it's a significant amount of personal finance talk. So I see this young lady, and she's given us this. She went in. Like it was like 10 different things. And I thought, oh, I got to bring that to the show. We have to walk through all of those things and give some opinions on it. So we watched the whole thing. First initial thoughts.
I wrote down like 9 things.
Okay.
And I was still writing down one more.
I love it. So here's what I was thinking. Let's just go one at a time. I'll play one, we'll pause it, and then we'll go from there. Does that work?
I love that.
Okay. Oh, we got to start it over. Here we go.
I'm 54, and if you're younger than me, here's some really hard financial truths that are probably going to make you uncomfortable, but they just might save you.
Okay, I got to stop it right there. What about, she said I'm 54, and if you're younger than me, here's
Yep.
some truths. What about the people what about 55-year-olds?
Yep.
Right? What's your 2 cents? I got a thought, but what's your 2 cents?
Of course you do, because we always have such a wide spectrum of folks that work with us and
Yep.
that we serve. There are people younger than us, and there are plenty of people older than us, and we're sharing this idea of saving and spending your money at the same time. And of course, a 50-year-old, 60-year-old, 70-year-old and beyond is going to say, but is it too late? Can I all those things, of
Yep.
course. So if you hear something like that from that wonderful lady or from us, and it strikes you, you are whatever age you are.
Yep.
Do something about it.
Here's the thing. She delivered some really structured financial principles in her delivery in her 1 minute on social media, and those financial principles apply no matter how old you are.
Yes.
Is right. So when I heard that originally, I thought that's a good hook. I'm younger than 54. I'll listen, right? But then as she went through it, I'm going, these apply to everybody.
Yes.
I hope the people that are 55 or 60 are not scrolling, see that and go, oh, well, that's not for me then, and scroll, right? The people who are of what we would deem in America that retirement age, right? We've got baby boomers that are a little bit past retirement now, and we've got a new generation of people at retirement age. Those are the people that actually focus the most, spend the most time thinking about finances, money. The younger generation, the teens, 20s, and 30s, a lot of times don't. And that's why they get into so much trouble when they're of that retirement age and have to spend so much time thinking about it.
Yes. And
Right.
yet I also feel like there are so many more conversations now too that are at least available for the younger people, whether we tune in when we're that young or not.
Exactly.
Who knows?
So that was my first thought. Don't let that age thing fool you. You use money, cash flow. You need access to cash no matter how old you are. I don't know about you, but I still need to eat when I'm 70 and 75 and 80. That means I need to have spent money. I probably, as long as I'm active and healthy, I probably want to go see the family, the kids or grandkids. I probably want to go on vacation still. I don't want to sit in my house and do nothing. I mean, we've got a beautiful Moroccan empire to go see.
That's exactly
right.
Yes.
It doesn't matter to me if I see it when I'm 30 or when I'm 40. I want to see it though. That's on my list, right? So don't let that age thing fool you. All right, let's keep moving.
Your dream life is possible, but not with your current financial habits.
I just had written down, that was the second thing that I'd written down from her, which was just habits.
Yeah.
That's all I wrote down.
I see. The thing about it, when I watched that, I really like that thought, because I do feel like you can achieve anything you want to achieve. And in fact, we've recently been talking through a few people who have showed us like the cost of the amount of income that you make as an American living in this country versus the amount of income you make outside in the world. And we make so much money here.
Yes.
And their thinking was, you have
so much
more than enough. You spend too much. Like you have more than enough. You don't have good habits, right? Yeah. Okay, Jake's saying he's still fighting Parkinson's law over there, but they're working through it and eventually conquer it. Off the top of your head, Jesse, you remember Parkinson's law?
I do, sure.
Okay.
Our natural human tendency is to expand to whatever envelope we're talking about. We've got a deadline to get the project done by Friday. It's going to be done a minute before the deadline. Money, you earn this amount. The natural human tendency is to spend all of it.
Yep. I can't put it any better. One of the things that I think that I learned pretty early was this idea of Parkinson's law. Now it didn't have a name to it when I learned it. It's not like I knew, Parkinson's law. Now, not that. But one of the things that I learned pretty early was that, and I've always kept my family finances in a really low threshold, and that has really helped me.
I'll give you a real life example. Yeah. I love yours. I'll just do a time example just to add some time to the money example you just gave. Okay.
Yep.
When we actually show up on time now to events, meaning like 5 or 10 minutes before it gets started, my children are like, are we late? Because I decided a little while ago, and I wouldn't have known that it was Parkinson's, but I decided a while back, hey, we're going to be early to stuff.
I like that.
Now, when we show up on time, they think are we late?
Yeah. Like they just anticipate when we show up, there's only a few people here. We get to greet everybody or watch everybody come in. That's how we do events. And I
Yes.
like that. Okay, that was my 2 cents about that one. Are you ready to keep going?
Yeah, man.
All right, let's do it.
Need a payment plan to afford it? You can't afford it.
Mm.
Mm-hmm.
If you
People
need a
set
payment
different
plan to
parameters
afford
here.
it,
I've
you
heard
can't
people say
afford it.
things like, if you can't buy 2 of them, don't buy the first one.
Yep, I've heard that.
So I think everybody ought to pick whatever, framework they want to use, but the principle is really good.
The principle is good. They have the American dream, the American consumerism, the American market has pushed this idea of payment plans.
Mhm.
So if you are okay with an extra $100, $200, $500, it's fine. You can buy this thing. And I do agree with her. No. That's what consumerism and the marketing has pushed. That's not a disciplined financial habit at all. And that should not be your personal philosophy. That'll get you into a lot of trouble.
I think
Right.
if we gave something physical to go along with the concept that she's talking about right there, it'd be helpful to people. What just jumped in my mind was leeches. That
Okay.
idea just really bothers me physically to think about leeches.
Sure.
Right. But that's what payment plans are, where you're bleeding out
Yep.
interest money.
I was just talking to my brother over the weekend. I went to my back was hurting pretty good. So I went to a chiropractor. And this particular chiropractor had a monthly subscription you could sign up for.
Gotcha.
And I literally sat in the car and I went, I needed the chiropractor. My back was hurting pretty bad, but I really despise payment plans. That
Right.
idea. And one of the reasons is because of what I just said. I've kept my family's expenditures relatively low compared to our income. And so I tend to avoid payment plans. I
Mhm.
avoid them like the plague because a camaraderie becomes a necessity.
Right.
And then all of a sudden my budget's leaking. I just don't like them. I don't like them. Again, I'm not saying I don't have any. I've got some payment plans here, folks, right? I've got little kids. My little kids enjoy watching cartoons every now and again. I've got a couple of those subscriptions. Actually, not a couple. I do one at a time, actually, because I don't like payment plans. But I'm not saying I don't have any, but I'm saying I generally tend to avoid them because of exactly what she said.
Well, you're disciplined. She's
Yep.
getting ready to say that word here soon.
Yep. I love it. Let's keep moving.
You're not saving money when you buy something on sale. You still spent. You just spent less.
There's a dichotomy there. That's all there is to it. If you know you're going to buy something, my thought is if you are proactive enough with your savings and it is something that you're going to do anyway, math is math.
Yep.
It's still a win if you buy something on sale that you genuinely, authentically, we're going to do anyway.
Yep.
Awesome.
Yep.
But there's still what she's saying is also true at the same time. So those two things are true at the same time.
So on social media, there was a movement. If you're on social media, you're going to realize this. There was a movement for a little bit of time here about something that was called like girl math.
Okay.
Okay. And it was to be these women who would be talking to their significant others, their husbands, whatever, and they would be using girl math. And they'd say things like, it was a big movement. They say things like, no, I didn't spend money at Starbucks because it was my 10th drink, so it was free.
Gotcha.
And the guys would be like, no, that's not, you spent the money, like you, right? And they would just continue. It was over and over. And a big one was, no, if it's on sale, we saved money. And so I think that's what she's coming to combat. Like, no, just you bought it, you spent money, right? And
yes,
so I like it.
The answer is yes. I feel like it's a good segue into talking about volume.
Okay, I like
volume.
that. Yep.
Right, because there are lots of financial institutions out there that will offer you something, a reward,
Sure will.
it's something, right? And it's pretty and it looks good and it's incentivizing. It is an incentive. But then, of course, if you can detach, take a step back, look at the whole financial picture of no, you bought 9 of those drinks to get to that 10th
Yep.
free one. So I just think of the one-liner is this: the customer pays for everything.
Yeah. Right. The customer pays for everything. I recently found a couple groups who say nothing is free. Absolutely nothing is free. Somebody somewhere paid for that. Right. And I started to think through it and I'm going, yeah, I think I agree.
I'd love to hear from anybody an example in the comments of
Right.
where something is for free.
Yeah. Okay.
It'd be interesting.
Put it in the comments if you can. Let's keep moving and get the next one here.
You don't control your money, someone else will. And guess what? They're not going to use it in your best interest.
I love the back end on that one. I wrote down the word control because
Mm.
we're big on control around
Yep.
here. But then that was another one of those combos. She jabbed and then she crossed.
I really like
Not to
that
your
one
benefit.
because, man, how true is it? I think as I get older, as I start to understand more about finance, about personal finance, about money, I started to value control more than anything. Actually, I really, really value that. So actually, this is a great way to talk about something that I've been doing in the infinite banking space currently. So if you've ever read the R. Nelson Nash book, Becoming Your Own Banker, which we've got on the shelf back here, maybe Jesse will grab a copy. R. Nelson Nash has a couple of key principles when he talks about his personal finance philosophy. One of those key principles is if you are going to learn to become your own banker, like the name of the book, you are not supposed to do business with banks. And so this I've struggled with a little bit of time because I've got all these other people out there, lots of good people. There's nothing bad with them or their channels or their influence or their message that preach this idea of I was going to say albatross, but I don't think that's the right word. Anyway, that preach this message of well, if the bank's going to give you money at 1 or 2%, borrow the money from the bank all day. And so I got this in my head and I just started to really wrestle with this. And I realized over the last couple months, you know what? I value control more than I value anything else. And because of that, I really don't want to do business with banks. I don't like them, actually. I don't like anything that they stand for. I don't like the way that they treat me. I don't like the way that I have to jump through hoops in order to get this and that done. I don't like this, actually. And so because of that, I actually took a loan from one of my infinite banking policies last week. It's sitting in the account right now because I was just out of town, haven't had a chance to use it yet, with the intention of actually paying off a loan that I was keeping. I had the ability to pay it off, but I was keeping that loan active because thinking through I can loan money from the bank at this number and loan money out at this number, and I'll make some spread in the middle. And I decided last week, you know what? I'm not doing it.
So you don't have to get super detailed, but was it a relatively low rate? I'm just curious.
Super low rate. Two. It's on a car. It was 2.29 or something, 2.49 maybe, something like that. So pretty low rate on a car.
Right.
But I really just last week I was like, no, I don't actually like this. I don't. Plus, okay, let's go back to something I said earlier in the episode. I don't actually like payment plans. So that's a payment plan. I got to pay that every month.
Right.
I don't like payment plans so much. I don't put anything on auto pay. I don't like payment plans. So it's not on auto pay. And because of that, that's actually helpful for me because I have to touch it every month. I see it every time. Nothing automatic. I want to see it because if it hurts, I want it to hurt. And if it doesn't hurt and I like it, I want to like it. And if I didn't watch Netflix this month or my family, does that make sense? I'm going to not pay it. I'm going to cancel it. Like we're not going to do it this month. Or if the number was too high, right? I know exactly where I can pull the levers to lower it or whatever. So that's how I've kind of kept a handle on my family finances. And so I just decided, no, I'm not logging into this website one more time. I'm just not going to do it. So that loan's gone. Like as soon as I can do it later today. I was going to do it a little bit later because I'm going to record it so I can put it on.
Yeah. Document it.
Yeah, I can document it because I'm getting out of here. I'm like, this is dumb. I don't like them.
Well, anytime that you're going to lay on, which is a really strong facet of that potential discussion, anytime you can lay on the layer of your principles or your thinking behind something, it's probably going to trump all the math facet of looking at it or the So anytime that you say, well, I don't like what they stand for, which I agree with, okay, and not everybody has to, and that's fine, but wherever somebody lies, that's probably going to be the strongest argument.
Right. I used to put more value on the math. Let me do the math. Let me see what makes sense on paper. Than I put on the values and things that I care about. Because maybe at the time it's like, oh, well, I don't really care. Or I'm not going to put a lot of time and energy and effort into thinking through that thing. And so because of that, I'll just rely on over here. But I started to really think through what I care about, what I stand for. what I like and don't like, the way it makes me feel, the way it makes my family feel. And I decide, I'm like, no, this stuff is dumb. I don't want to do business with banks. Actually, I don't want to. I will jump through a significant amount of hoops probably in the next year or 2 years to even eliminate things like a house payment, because I don't want to do business with banks.
Right.
And you're going to get on the internet and you're going to read all this stuff and hear all this stuff where people say, never pay off your house. You can write off this and write off that and write off whatever. And I'm going, I care about control. That's what I care about. And if the world hits the fan or the hurricane comes back through like it did 5 months ago, right? Knocks out half of our town specifically. I want control. That's what I want. And that's what I'm going to go get. Like that to me is more effective. So I really like that for her. Jake's talking about credit card companies using points to then get you to pay with the credit cards,
or miles, or no annual fee, or just something. Yeah, for sure.
That's a slippery slope, because if you can if you've got solid financial habits, which I hate to get on this live and let you know, but just in case you're watching, most people don't.
Yes.
But if you do have solid financial habits, I'm not upset at a credit card, but most people do not. So I'll tell you, I use a credit card for points. I've been doing that for about 1.5 years. I can literally log into that site right now and tell you that in the last 1.5 years, I believe they've gotten $1 worth of interest from me. $1. It happened like 2 months ago. I was pretty frustrated about it.
I'll bet you were.
Because I didn't know how I messed up, honestly. I don't know how they got $1 from me, but they did. I consider that pretty disciplined. Now, when I was 18, 19, 20 and had credit cards, not disciplined. I just told you I was $19,000 in debt earlier. But most people aren't. I did not start that way. It took a long time to get there, but I like them. But I agree, it's a slippery slope. They set them up like that on purpose. 0% APR for a year. What do you think happens at 13 months? What do you think the average balance is at 13 months? They're doing this stuff on purpose. They're not goofy.
They're not losing.
Yeah, they're not goofy.
That was the second part of what the lady was saying, is somebody controls it and it's not to your benefit.
Correct. They're not trying to help you. All right, let's keep moving.
The card is not an emergency fund.
Hallelujah. And amen.
I like that one.
I'm not, and I'll be the first to say that there have been times where that might have been what I would have used in a pinch.
Yep.
I mean, I've had a big evolution over time so far now. But I agree with that.
Yep. I agree with that wholeheartedly. I don't think there's anything left to say. If you are watching for the first time or just tuning in, we've got some helpful videos over on YouTube where we talk about things like she just mentioned, the emergency fund. So if that's you, jump on our YouTube channel, scroll through, type in emergency fund, search our channel, you'll find them, and you can go through and watch that stuff and let us give you our 2 cents on that. We've also going to keep going. She's got some more things to say. I liked it.
I'll say this about the emergency fund. Okay. Because we offer these free consultation calls with folks, right?
Yep.
And I think it's a worthwhile point in our conversation. And I do this to ask them, hey, where are you at with having an emergency fund? And it's a good idea, in my opinion, to have something that you could get to right away.
Yep.
You put that where you want that, but right away in the next 24 hours, I for sure could get to this. Checking account, savings account, hole in the yard, bunker, whatever.
I think most financial stress and pressure happens because people don't have enough money saved. Not even close.
Yeah. I mean, one quick ER run to, the hospital with a child that needs stitches or whatever. It's like, that's a real life scenario. That's really happening.
My wife and I were walking through our finances recently and thinking through, like, how much do we actually want to have saved in our emergency fund? You've heard things out there. There's very popular people who are going to say 3 to 6 months of savings, right? So here's the analogy I used in my house. When we got married, my wife told me that she wanted 2 to 4 kids. And I, for years, like literally like 2 years, would say, that's not a number. Tell me what the number is.
Okay.
Because what does 2 to 4 mean? Like, is it 2? Is 2 fine? Oh, 2 to 4. Is 2 okay? Or is it 3? Or is it like, what is it? Like, you know what I mean? And so we were talking through this, and they're going, you want 3 to 6 months of emergency funds? I felt that same energy come over me. And I went, no, but for us, what is it? Is it 3? I said, listen, 3's not that great. 3 is a car accident and hurt leg and 3 months. Like, that's not very long, maybe we should go for higher. Maybe we should go for 6 or a year for us. Like, let's do that, And so we went through that, and I thought I had that same energy came over me. 3 to 6. What does that mean? Like, anyway, I think, again, a lot of people just don't have enough money saved. Jesse, imagine this. You're a W-2 employee. You're still working at the school, maybe back when you did that, or somebody works for just a company, whatever, but they've saved their emergency fund aggressively and on purpose. They have a year's worth of their expenses in savings, not on a credit card. And then something happens at the school that they don't like, or they get a new opportunity to pursue something they've always wanted to pursue, but it's a little bit of a step out on faith. How much easier is it for them to make that decision and jump because of their savings?
So much, because it's literally a stronger launch pad to make that jump. Or some would even say that makes it much more like a step instead of jumping out on
there
faith.
You go. I want to
Because
go
it gives that
join this.
measure.
I want to go do this. There's a 2-month, a 3-month waiting period, training program, probationary, whatever. How much easier is it because of my savings?
Yeah. And then I would say the connecting dot to infinite banking is that once you have that real close emergency fund at home or in a savings account or checking account, when you're building the 3 months, the 2 years, the 9 months, whatever it is that you do decide, that strategically, in my opinion, could be more efficient for you by being built as premium into a policy.
There you go. Jason just joined us over there on Instagram. What's up, Jason? What's up, man? Jason, we're playing a video. We're giving our comments. We're going to play the next one here, and then you got to type in what you're thinking about. We're coming to you. Here we go.
If you don't take the time to understand money, you will spend your life working for someone who does.
I think of the Einstein quote, or I believe he's the one who's accredited with it anyway, of around compound interest, right? He who understands it earns it. He who doesn't. Now, she just made it more broad than just compound interest. But we, of course, talk with folks about how to be able to experience constant upward growth trend on your money for the rest of your life. That is a guarantee that you can have using these kinds of policies that we build for folks. But she just made it real nice and broad. So I'm completely on board.
I like that one too. I don't know if I need a bunch of comments on that one. I appreciated that one. I think that is absolutely true. If you have not learned that yourself in your own personal life, maybe I should send the video out or something. We should, you know what I'll do for all those who are watching this and you're thinking to yourself, how do I go watch this video later? Here's what I'm going to do. After we get done here, I'm going to make a reaction to this.
Okay.
So that way it's posted on our channel and you can hear her whole video and you can hear 1 or 2 sentences of my thoughts after that. That way, if you're watching, you're like, oh, I do want to go find that video. I'll have, you know how it works, right? You can link them and link their video and all that fun stuff. So I'll do that.
And you could even put it in our Facebook group. So we've got a community on Facebook. That group's called Infinite Bankers. That's a good place where we have lots of community and conversation, and people are sharing best practices and, hey, what about this? And it's a good resource as well.
There you go. All right, let's keep moving.
Stress, it's self-inflicted.
That's what they call tough love.
Right? Financial stress is self-inflicted. What do you think about that one, Jesse?
Yeah, it's either next, I think, is where she's going to say or underscore that sentiment right there by talking about choices.
Yeah.
Choices. I mean, we're making those. So it is either improving or deteriorating what it is that we got going on, for sure.
I think that it is true. It's back to our savings conversation we were just having. You're stressed because you don't have enough in savings. And you're stressed because if you did save money, you saved it in the wrong area. You thought it was savings, but it wasn't savings. It was investing.
That part.
And so you put 5% of every single check you ever got. Amazing if it was savings, but you put it in an investment where it locked it up and you couldn't get it. And so now that stress came into your life, like you mentioned, 1 trip to the ER, like I mentioned, you want to take a leap of faith on a new job, the car breaks down, whatever, and you don't have access to any money.
Man, it's another 20 years, Jonah, before I'm 59 and a half. That's 20 years from now. That's crazy,
man. It seems so long, right?
That's crazy.
It seems so long.
And I love thinking long range.
Yeah.
You know how I mean that.
Yeah.
You know what I'm saying about that locking up that you were talking about.
Yeah. So I agree with her wholeheartedly. Financial stress is self-inflicted. You didn't save enough money, and if you were saving it, you put it in the wrong spot. You thought it was saving, it was investing, or you saved it. So here's something that actually somebody stepped on my toes, right? They were like, when you think about savings, describe it. Write down what you believe about savings.
Okay.
And then when I did that, I realized that putting money into a savings account for me in my life never qualified for my definition of savings. I would put money in, I've used savings accounts before,
Okay.
and the money sat there for a good 60 days before I spent it on something.
Okay.
Before I transferred it from savings back to the checking. You know, you heard that Kevin Hart joke, transfer it from your savings to your checking. It takes about 3 business days. So he couldn't help pay for dinner because all his money was in savings. He's got to transfer it to his checking. It's going to take a few days. Okay.
I have not heard that. That's funny.
That literally was me. Yeah. I save. Okay. How long has the money been in that savings account? 4 months. And then I'm going to use it.
So just
that's
the other
not
day,
savings.
It's not. Just the other day, because I can't take credit for this. Recently, just the other day, Becca Wilhite, a friend of ours, said or asked the question. She put it out there as a question. She's been nice.
Okay.
But is our savings just simply delayed spending?
Yeah. It's the checking. It's delayed checking accounts. It's what it is. It's not. When I wrote it down, I've never saved before. The only time I ever started saving is when I started saving money inside of our specially designed whole life insurance policies. That's the first time I started savings. More Creativity wants to know here, Jesse, why in the world everybody in the US is so heavy in credit cards? Is it because of some kind of score? Here in Europe, credit card debt with insane interest rates are just rare. Just curious. And they're sending love from Germany.
We appreciate you.
I do appreciate it. Hey, More Creativity. I'm going to be in Germany twice before the end of the year. If you wouldn't mind, what part of Germany are you? I'd love to know. Jesse, what do you think about that comment?
Well, I think it's interesting. Number one, that we're getting a conversation going with friends from the Moroccan Empire and then Europe. So there's that, right? First and foremost. But then, I mean, it must be culture, right? It must be conversations. It must be examples that we had. I mean, that just is what naturally occurs to me, right? That whole concept of don't do as I do as I say, right? So we're just seeing what has been modeled for us. I think across the board is my big picture answer to that.
Yep. More Creativity. I might be able to shed just a little bit more light. What Jesse said is perfect. But here in the US, people have a crazy amount of spending. We spend a bunch of we spend so much money, and things right now especially cost significant amounts of money. And so the problem is nobody can afford anything. Since nobody can afford anything, you have to go get loans in order to buy something. For instance, I'm going to make up these numbers. I do not know, but I was at dinner with somebody on Sunday who bought their house 30 years ago for $58,000, and that house is currently worth $540,000. I do not have, and the average person does not have $540,000. So we'd have to go get a loan from a financial institution if we wanted to live in that house. Now you might be thinking, don't buy that house. It must be a mansion. No. This house was 1,100 square feet.
Right.
So here's the problem. It's like live in substandard conditions or go get the loan. Then you go get the loan. How do I get the loan? You've got to have a good score. How do I get a good score? Keep a good score? Credit cards. Then again, we've got this consumerism issue. So I also want the TV that they put on for the big game, and they should run the ad, and this billboard is showing this, and people just spend. It's crazy spending here.
I see 3 levels. There's this micro level, which is where this lady's at in this video, right? We're talking about choices. We're talking about discipline. We're talking about habits, right?
Yep.
And then there's this level above where you're talking about, well, business is this way, real estate is this way. If we go real high level just for a second here, and we think about, well, how does something for 50,000 go to 500,000? You add a 0, it goes 10x. Well, maybe there are entities that have printed multiples of the volume of money that existed those 30 years ago.
Agreed. Which we're having that. Okay. More Creativity says Bavaria. Okay. South of Munich. Love it. Hope you have a great time here. Thank you. I will be spending about 5 hours in Munich just because of a layover next week on Wednesday. And
You flying Lufthansa?
I am Lufthansa. And then I will be back in October, and my mom actually is moving out to Germany and to close to Munich also. So I'll be hanging out over there. So thanks for sharing.
Appreciate you
been there a
subbing.
bunch of times. Yeah. And thanks for the subscribe. We really appreciate that. All right, let's keep moving. Let's see what else this Instagram video says here that we found and that we're kind of dissecting.
Retire on vibes and optimism. You're
There we go. I like that one. That one was quick. You can't retire on vibes and optimism.
Give it another second though. I feel like she had a
Okay,
back.
okay,
I
okay.
feel like there's a back half. To
Let
that,
me
too.
try to back it up.
retire on vibes and optimism. You're gonna have to work until you die if you don't start investing.
Yeah. So I'd heard the last part right there,
Okay.
but again, hearing it the second time, the first part was actually the part that made me laugh because
Yeah.
it's like saying the second part, but in a different way.
Uh-huh. You can't retire on vibes and optimism.
Right. And I'm a real optimistic guy. Do you lean one way more than another?
I
wonder.
do. So I actually got called out. All right, everybody if you're still watching, then you care about our thoughts and opinions. So let me tell you what's happening in real life. Okay, so I'm reading this book. The book was called Surrounded by Idiots. It's a tough name, but really it's named that because the book is all about learning the different personality types. So it's the premise here is sometimes you might think you're surrounded by idiots, but it's because you don't understand the different personality types, and you should go figure this out so you can figure out how to interact with people and that they're not actually dumb and all that sort of fun stuff. Okay.
Cool.
So I'm reading this book, Surrounded by Idiots, and it gets to my personality type.
Mhm.
And it says, these people are pessimists. Wait, no, they're not pessimists. They're realists. Sorry. And keeps moving. That's how it said it in the book. And I felt personally attacked because I kid you not, 2 days earlier, my wife and I are talking and she goes, "You are such a pessimist." And I got frustrated and went, "I am not a pessimist. I'm a realist." And we went back and forth, and then I let it go because I'm like not trying to argue with my wife right before bed. You know what I mean? That sort of thing. And then 2 days later, I read a book and it literally said that. This personality type are pessimists. Wait, no, sorry, they're realists, and kept moving. And I thought, no, now I have to go apologize.
Felt pegged.
Yeah.
Huh? I'll say this: if you're married out there as well, like I am, I would suggest certain conversations are sunlight conversations. It's just my feeling on it.
Okay.
That's my take on
Describe
it.
what you mean by that. Sunlight conversations.
If the sun's not up, we're not going to talk about anything that
okay.
anybody could construe as
There you go.
a downer or depressing or just maybe. And I'm a big fan too of not being angry before you go to bed. Don't let the sun go down on anger also. So yeah, certain conversations I think are better in the sunlight.
I like that. Anyway, so the reason I said that is because I consider myself a realist, which I'm now realizing that other people are going to automatically put me in the pessimist category because of that. So I think, however, I'm a millennial. That's the generation that I fall into. Millennials absolutely are trying to retire on vibes for sure. They just don't care. They're not going to, it'll work out, especially the generation right underneath me, Gen Z. And then underneath Gen Z is, what are they? Ys? I don't know. I don't know how the generations works. Ys, X's, that vibes. They're trying to retire. It didn't work. It's too expensive because think about it. I've got little sisters. I got 3 little sisters, 20,
because they think that it's futile. Perhaps.
27, 25, and 21.
Okay.
Does the 21-year-old think that she will ever own a home? Look at the home prices. She
No.
has ruled it out.
And they're always talking about it.
She's literally ruled it out. No, I can't. Why would I? No. I literally am going to live with my girlfriends and we're going to split something for the foreseeable future. How in the world would we get that much money? Does that make sense? Whereas the generation above, right, Gen Z or is right. What's right above millennials? Is it Gen Alpha? More Creativity says Gen Alpha. I forget where Gen Alpha is. I'm not good with the generations.
I can't help you.
But regardless, that generation bought their houses for 10 to 60,000. That's where they bought them, and that was like 2 years worth of money. That's all. You know what I'm saying? That's all it was. My little sister at 21 has ruled it out. She does not think about it. It is not on her list. It is not something that I could maybe join one day. None of that stuff. It's done.
It's definitely one of the last things that if I keep digging in a conversation when we have these consultation calls with
Yep.
folks, when I keep digging on, once we've covered 12-month goals, 5-year goals, that's one of the things that are definitely brought up. But
Yep.
I'd like to
There you go.
eventually have a place.
There you go. But I'm saying, again, I think age is a big deal. I've got 3 sisters, 27. Oh no, we can get there. We'll figure it out. 25, currently rooms with 3 other people. 21, not even going to try, like legitimately not going to try. So they're not saving toward it. They're not like, we're not trying. It's too expensive.
But so maybe it's the optimist in me that wants to say something encouraging to all 3 of them right now.
There it is. Maybe. All right, let's keep moving. Here we go.
Bank account reflects your choices, not your excuses. You don't believe me? Take a look.
Your bank account reflects your choices.
Mm-hmm.
Don't believe me? Take a look.
Mm-hmm.
That's powerful. That's powerful. A lot of people, I'm guilty of this too. A lot of people, she talks about it here. The video is going to wrap up about like impulse buying, impulse spending. I think she ends up saying that impulse spending is taking away your dreams, one purchase at a time or something like that. And I think that this goes right along with that. I like that so much because you really have to get disciplined. That's the key to financial success. Discipline. It's not how much you make. It is what you do with what you do make.
Mm-hmm.
That's what it is, right? That's it. I think that a lot of people jump to, she talked about it earlier. She said, hey, if you don't invest, you're going to have to work until you die. I think a lot of people jump into investing a little bit too soon. They never set a big savings foundation to give them then the opportunity to go invest strategically in the things that they know well or like or trust or can. They never set a foundation. They literally start investing at 18 when they get the job. I finally am going to make $30,000 a year, and I'm immediately going to invest a percentage of that they're told. 5%, 6%, 7% with a match, 10%. They immediately they have income coming in, and everything's going to investments. They save nothing. And they don't realize that you have to invest the money from somewhere, and a big savings foundation fixes so much financial stress and pressure. The savings foundation is what you're missing, and that's the foundation that gives you the freedom to go do so many other things and flexibility.
Well, there really are so many people, whether it's HR from your company that walks in front of the room once a year and says, hey, here's the thing to do, and you're just trying to check the boxes. You're just, and then everywhere on media, and here we are on media. So I get it, right? Take it for what you want it to be. I really like now, I've had an evolution there. I really like now the idea that when savings are big enough, that emergency fund becomes a capital fund. It becomes right. It's like when you get to whatever level you want, like we were talking earlier, maybe it's 3 months, maybe it's 2 years, maybe it's not, but when you do have that and you keep going and you keep flexing that muscle, then that emergency
everything on top becomes your opportunity.
Opportunity fund,
right?
Yes.
I like that a lot. My family, because of some recent listening and understanding and reading that we've done, is moving to that very quickly. We are going to do a certain ratio. We're going to say, hey, our emergency savings is going to hit this number or this level. 6 months, 1 year, 2 years, a number, whatever we want to feel like this is our foundation. Everything above that then is free to go and attempt to invest in things that we like, know, and control. I'm not giving up control for anything. I mentioned that earlier. So you're not going to catch me using any of the government-sponsored plans in this investing strategy. It's not going to happen. In fact, a significant amount of my investing strategy is going to involve, and currently involves, cash flow. If it does not produce cash flow, I do not want to know about it. For me personally. Okay. So all the government-sponsored plans are out. There's no cash flow. Okay. Correct. They're out. I want cash flow. You know why? Because cash flow then can pour back into my savings foundation, which then increases my liquidity to go invest and try to make more cash flow. Does this make sense? Okay. So that's what I'm going to be doing, but we're going to do it on a ratio. We're going to say, hey, once we hit our number, we're never going below this. Anything above that, right, as we get pretty big, and anything below that, we keep. Anything above that, we can do the things that are presented to us or that we think we're good as a family or whatever. And again, if you lose that, it goes wrong, left, right, sideways, that stinks, but it's not our foundation.
I'll tell you what, for as much as we could disagree on, I love it when Dave Ramsey says our emergency fund has an emergency fund.
Yeah, that's good. Right. And that is so important. I think so many people miss that. All right. Here's what we're going to do. We're going to try to play the rest of the video here, our last couple minutes, so we can at least talk a little bit about what we're doing in the infinite banking space for all those who are watching, and give them some next steps if they want to. So let's play the rest of the video and we'll do it.
Every dollar you spend is a vote for the life that you're building. What are you voting for? Security or poverty? You don't need a financial miracle. You need financial discipline. Stop praying for money and begin managing what you have. Your future is being sold off one impulse purchase at a time, and you will never escape the cycle of being broke until you admit that you are the problem. Hope that helps.
The one thing that I'd written down from all that last that she ended with was the managing part. Be a good manager. And for me, I'll use the word stewardship because that means something more to me beyond even for my marriage and for my household. I've got a bigger picture than that. I believe that everything's the Lord's and I want to be a good manager, which means that I would have to say, in agreeing with her, that she's pointing out in my life at times, I should have to be very upset with myself, actually, a lot of times.
Yep.
I really should be. And I love that she's saying it the way that she's saying it too. She's saying so many great things, but she's saying it in a great way.
Yep.
So stewardship and managing, that's what I gravitated towards right there.
I love it. Man, I think when I see videos like this and I take the time to actually watch them instead of just scrolling on the phone and next video and who's going to do the goofy dance next and what's going to make me laugh. When I take time and find videos like this and I actually sit here and watch them, we spent an hour going through this 1 minute video.
She gave a lot to work with.
Right? An hour. And what I go through, and when I sit down and when I really think about it, I think about, man, you just have to take yourself seriously. Take yourself seriously. Take your income that you make seriously. Take your family position seriously. Like, I get it. I like basketball. That's my thing. Right now, the National Basketball Association, the NBA, has lots of games because it's their end of the season tournament for a champion. So I end up watching TV a lot at this time because I like basketball. So
you
I
like
watch
the Ponders, right?
The Lakers. Thank you. But I watch basketball. So here's the problem. I watch basketball. They fill the basketball with commercials. I see the commercials just like you guys do. I know that there's a new grill and there's a new this and there's a new that, and that influences you. That's why they put it there, to influence you. But you've got to have strong financial discipline. I'm not saying don't go buy the new thing that you want. I'm saying run it through your financial checklist, your guidelines, your family's goals before you make the purchase. Right? I'm saying if you want the new thing that costs $1,000, you want the new grill that costs $1,000, you got to run it through those guidelines, which means you have to have guidelines to say we are allowed to spend $1,000 on the grill, but we are only allowed to do it if this is met and if this is met and if we have it here in this fund and it's over this threshold and it's does that make sense?
Yes.
Then if that's the case, go buy it. If that's not the case, do not let that influence you. And I think it's actually more healthy, Jesse, I do this from time to time. It is more healthy to say, I do want the grill. I really want the grill, and I'm bringing the grill to the meeting, spouse. And we run it through the financial checklist or guidelines, and it doesn't meet the requirement. And so therefore, we knock it off the list. I think that's so healthy because then it's not in my head. It's not in my head for 3 days going, I could just buy it. I should just get the grill. It'll be fine. Run it through your checklist and realize these are the reasons why it's not going to happen. I'm not going to go get that. It's been really helpful for me.
I love it. Yes, I love it. You're having conversations. You're creating that checklist for yourself. I love it.
There you go. Jake says he stopped his government plan to put money into his cash value whole life policy. I love that.
Jake likes control too.
Yeah, we are not financial advisors, so we
Nope.
can't advise you to do it, but I've done that. Jake's done it. Did you do that?
I did.
Yep,
I did.
Jesse did.
Yeah, people take one of three routes typically. You know, they're either going to keep what they got and they start infinite banking as well. Beautiful. It's
Yep.
everything that they wanted it to be. Some people decide to stop contributions. They keep what they already have. They divert new cash flow to policies. And then other people, you know, maybe they were young enough like I was when I saw infinite banking and saw a better way for me to have that control and be able to really put hands on the profitability that I could experience again over the, I mean, even now I've done infinite banking for 10 years and I was just telling you a second ago, it's 20 more years until I'd be 59 and a half anyway.
That's crazy.
Crazy.
When I just looked at those qualified plans, those government sponsored plans, I just realized that I couldn't give one good reason for keeping my money there.
Right.
If someone asked me, write them down. What are your reasons? I realized I didn't have any. I had no reasons for keeping it there. That's what they told me to do. It's easy. I don't really know what else. Those are not good reasons. And for that, I was like, no, I'm just not going to do that then. I've got something else that I'm interested in, that I'm learning about, that I do like, that I can list 2 or 3 or 4 reasons. It's been a decade. I can list 15 good reasons now. But at the very beginning, I got 2 or 3 good reasons. That's more than I had over here. And because of that, I'm out. I'm not going to do them. Right. All right, Jesse, we are done, man. Tell them where they can find more information if they'd like to.
Yeah, absolutely. Like I mentioned that Facebook group earlier, Infinite Bankers. It's a great community there. Be a good resource for you.
I love it. And of course, you can click the link in the description of this video, the link in our bio. If you're on Instagram, if you're on YouTube, if you're on Facebook, click the link. We got them everywhere. You can join our Facebook group. You can have a call with us if that's what you're interested in. We'll talk and walk you through what infinite banking is and why we like it so much. We can even send you the link so you can get books like this, Become Your Own Banker. You can read up on it yourself. Anything that we are going to offer you kind of initially is completely free of cost. We can do anything you'd like. We'll talk and walk you through it. You don't have to worry about paying. We want to get you the understanding. So we really appreciate you joining us for this hour. We will see you next week, same time, as we talk and walk through all things personal finance and have a little bit of fun with maybe some other folks on Instagram or TikTok, right? Anyway,
see you next week.
We'll see you next week. Peace.
You are now tuned to the banking bro. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.